morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are the last few days of March. Let's talk about the equity markets. Equity markets right now are a little bit at a critical junction. And what I mean by that is we have some positive things underneath the hood and we have a lot of negative things. So let's talk about some of these. So first of all, we have a lot of distribution days, 7 distribution days on the S&P and NASDAQ. And what that means, a distribution day is a day of heavier selling on greater volume. Now the problem here is, usually when you get this many distribution days, the market typically rolls over into a correction. Now, for the past year or so, every time we've gotten this sort of signal, the market has had these snapback rallies and continued higher. So the question is that going to continue this time, or one of these times we're not going to get one of those snapback rallies and we will roll over in a correction? Now also, one of the other bad things is 2 weeks ago on options expiration day and Friday, the market had a strong rally, but again closed at the low of the day. Again, indicating that institutions are probably selling heavily into these rallies. And we had a really bad down day last Wednesday, if you recall, where the NASDAQ lost a lot of ground. And then we had a little bit of a bounce on Thursday and Friday, but those bounces, especially on Friday, came in really anemic volume. So this morning we're having a pretty big rally. Dow's up about 250 points. But again, we'll see how that ends up today because, again, right off the bat, a lot of equities are up a lot higher than where they are right now in just about an hour and a half in trading. So that's one thing to look at. Now, also, the confusing picture is the NASDAQ continues to make higher highs and higher lows, and it's very positive. We continue to see the same thing in the small cap space and the mid cap space. Those are all very positive things. However, coming into today, the S&P was below its 50-day moving average, as was the Dow. And worse than that is we have the Dow Jones transports that are resting right about its 200-day moving average. Now, the transports have not participated in this rally. If they can't hold those levels, we may indeed see some further downside. So that's something I'd keep an eye on. Also, if we look at the NYSE Composite Index, which includes all the stocks, they've basically been moving sideways. They haven't participated in this rally that was started in February in the other indexes like the small cap, mid cap, and the NASDAQ. It's pretty much just moved sideways and also resting right above its 200-day moving average. So if you want to get a look at where the market may be, I definitely throw my eye at the NYSE Composite Index, see how that's doing, see if we see any improvement. Same with the Dow Jones Transportation Index. Now the market can go either way from here, there's no telling. But we need to be a little bit careful here because we got kind of lulled into a little bit of complacency where we expect these snapback rallies to happen, and one of these times they may not happen. So, as always, let price and volume be your guide. Just to sum this up, take a look at all those indexes, see how they're acting, see where they're coming into their support levels. Maybe they'll bounce off there this week, that's to be seen, or maybe we'll see further downside. So keep it light on the long side. You might want to hedge yourself a little to the short side. So this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Good luck trading.